Good morning, traders. It's 8 a.m. Chicago time on the 20th of December 2016. It's a Tuesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance as we sit here today looks bullish for equities, bearish for gold. Gold is down 102 basis points, down $11.60, followed by the Japanese yen, the U.S. bond, the euro, and the U.S. Treasury. So safety items are getting outflow into risk issues. Crude oil being at the top of the stack. Crude oil is trading at 53.50, up about 0.85%, 85 basis points, followed by the euro stocks in Europe, the Russell, the US dollar, and so on. Um, this morning, looking at the key news items, not to dwell on this very long, but Japan did have its policy meeting, and it would continue to purchase Japanese government bonds at an annual pace of about 80 trillion yen to maintain a 10-year JGB yield of about 0%. So the Japanese central bank is continuing on the current course. China's economy is expected to post its slowest growth in more than 25 years. Alan Greenspan commented yesterday that China's intervention into its currency is dangerous. Not sure what he's looking at to come up with that assessment. But the Chinese economy is expected to grow at a 6.5% clip in 2017. Um, and overall, that's really all I've got as far as what happened overnight. There are some, there was some news yesterday regarding the killing of the Russian ambassador to Turkey. I'm sure you all heard about that. It's getting murkier and murkier in that area. So we need to look out for that. The market has not priced in any risk there. Traded sideways yesterday. As far as what we're expecting today, not much on the calendar. Looking at today, it's pretty clear. There's nothing that is scheduled to come out still. Um, and let's switch gears here to our hypos from yesterday. Here's what we expected yesterday. The primary hypothesis was for a test up, down, and sideways. The uh, that is the hypo that worked out. Pretty tight range yesterday. We'll talk about that in a second. One of our members at Stage 5 Trading named Tendex posted this chart here that shows essentially that the tight ranges that we've been seeing for the past few months. This little chart here shows that the trailing 120-day volatility in the S&P is the lowest it's been since 2006. I remember 2005, 2006 were really difficult to trade, and then of course right after that you could see how it expands. Let me change my pen color here real quick. So you can see he's marking this as the lowest 120-day trailing volatility, and then you can see how it explodes, right? Balance goes to imbalance, and of course 2008 it went to 55% and then it dropped to 17 and so on. But this this is part of the story that the volatility is just not there. Anyway, that speaks to yesterday's trade and range. Not to mention that we are in the holiday season, and that's a big part of it. The second hypo was for a test down, find its buyers, rotate up, looking for 65 and a quarter as the target. And then an early test that continues lower is looking for 2243 on hypo 3. This is what actually happened yesterday. Right here, an open auction at the open, a push, a 7-point push. We do get the continuation. This is a setup right here. This is a setup against mid there. That's a classic for me. We did push through the prior day's high. The prior day's high is marked with this green line here. We did push through the prior day's high, and we found sellers, and the sellers came in and had a pretty big rotation down, and then we had the continuation below that. Very methodical market. So you have impulse, pull back to mid, chop, and an expansion, and an impulse down, pull back to about the mid, VWAP, and expansion continuation down. We had a nice another nice impulse near the close. So sellers kept showing up near yesterday's high, and we ended up with a pretty even profile with the point of control at 2258.75. The value area for today is valid, but we're opening higher. Okay, so overnight, let's take a quick look here. The overnight session, the overnight session opened and essentially didn't have it, even though it went sideways, it didn't have any sellers in it. It opened right where it closed, and retested that opening and closing price. So yesterday's close is this session's open, and started to drift up on the European Open and looks bullish. Overall price and volume, inventory is positive. Um, is positive as it stands right now. Not much to glean off of the overnight. We just got to keep an eye on 2263 and a quarter going into today's session. Not much else to cover. I'm not going to get into too much depth here. We started to build our another thing to observe is that yesterday's range stayed right above the point of control of the prior week at 2253 half, and built, as I said, an even profile, and now we're moving higher. It looks like it's basing. It's likely to push into the 2270 area before it finds resistance, and that's what I'm expecting today. As far as the primary hypo for today, let's scoot this back a little bit and let's walk this profile forward to fill in. So yesterday's trade filled in the middle right there, like you see here. It's filling in the middle, and we're starting to push higher. So it's starting to look more and more balanced. We're starting to get a fatter and fatter profile here, which portends a move out of this area in short order. So we're looking, again, the ideal situation, as I talked about yesterday, is failure to push higher, rotate, and then start taking out this thin end of the profile down here. That would be the ideal situation. But it's the end of the year, and it's not likely. This morning, we're expecting to open at 2265.75. The expectation is for an open auction out of range, responsive selling down into 62. I'm looking for 62 to hold, and then I'm looking for participants to start walking the market up. I'm not expecting too much range again. We're not likely to get a lot of range until the last trading day of the year. The primary hypothesis is bullish. We have broken out of this small triangle here to the upside, and I'm looking for follow through. Okay, but the initial trade is for it to be responsive, so I'm looking for a chance to get short into the prior day's value area high, which is around 2262 before the rotation up. Secondary hypothesis is that it opens, is unable to close the gap, pushes higher through the overnight high, and then continues higher, finds its sellers, and then comes back down and settles somewhere in the middle. We've seen that a lot. We've seen that here, for example, right here. Same sort of thing. We're repeating the same cycle there is what's expected under hypo 2. So initially, I'm going to look for sellers to come in. If there are no sellers within the first half hour or so of trading, and the gap stays open, then I'm likely to look for areas to lean long, looking for the market to push towards 2270. It's trading 2265.75, so not much room. I'm not giving trades much room these days. It is a pretty tight market. Anyway, that's all I had for you. I'd like to keep it nice and short. For everyone who's still waiting for that video from last Tuesday, I have not produced it. It's today should be calmer, and I should be able to produce a video as soon as I do. I'll send it to everyone who registered for the webinar last week, even if you didn't attend. And then on top of that, it'll be sent to everyone that joined the list, the spam-free mailing list, which is part of the description to this video. If you're not a part of that and didn't register, you might want to add your name, and it'll be sent out. I think you'll find it useful. Good luck today, and I'll catch you tomorrow. Take care.